Britain's housing crisis is one of limited new build supply that consistently fails to keep pace with new demand that typically tends to average twice the rate of supply, resulting in a worsening housing crisis each year, which explains why academic theories of UK house prices being in a bubble that is always imminently destined to burst that persistently fails to materialise. Instead, the reality is one of house prices relentlessly grinding ever higher, with an ever escalating house prices to earnings ratio that on average stands at over 7 times average earnings, and far beyond that of virtually every other Western nation, and in some parts of the UK is even greater than 25 times earnings. My long-standing forecast is for the UK population to grow from 62.2 million as of mid-2010 to at least 70.5 million by 2030. The updated UK population graph shows the actual trend to date based on recent ONS population data into mid-2012 of 63.7 million and an estimate into mid-2013 of 64.3 million, which suggests that the UK population could increase by an additional 4 million by 2030. As a consequence of what amounts to continuing out of control immigration and a high birth rate, that in total would translate into a population increase equivalent to 15 cities the size of Birmingham. The reason Labour supports unlimited immigration is because the vast majority of immigrants will tend to vote Labour. Therefore, Labour sees immigration ultimately in the terms of hundreds of thousands of new Labour voters imported each year that will ensure future further election victories. As Jack Straw's quote illustrates, Labour forecast only 13,000 immigrants per year, whereas the actual number was in excess of 240,000 per year. The latest ONS immigration statistics once more illustrate the failure of the condemned government to control immigration, where the past 5 years have just been a continuation of the Labour catastrophe, a 15-year-long megatrend of importing over 3 million people, most of whom are as vested interests expected to vote Labour. Net immigration has accelerated to 298,000 per year, now soaring to the same level of out-of-control immigration as under the last Labour government, which is set against David Cameron's 2010 broken promise to cut net immigration to the tens of thousands by the end of this Parliament.
Mr. Speaker, before the last election, the Prime Minister made a no ifs, no buts promise on immigration. Can you remind the House exactly what that promise was?
Well, we promised to cut net migration. We've cut it from outside the European Union, but it's increased from inside the European Union, not least because we've created more jobs than the rest of the European Union put together.
He was rather coy about his precise promise, Mr. Speaker. It was in his contract with the British people. Net migration cut to the tens of thousands. But now it's at 298,000, higher than when he took office. And here's what he said in the contract. Here's what he said. If we don't deliver our side of the bargain, vote us out in 5 years' time. When he said that, did he mean it?
Well, there are two reasons for high migration.
The most recent surge is as a consequence of opening the borders to Romania and Bulgaria, resulting in huge social consequences for settled communities and public services such as housing, health, and in school places. Whilst BBC propaganda tends to paint a picture of hard-working migrants contributing more than they take out, however, analysis by Open Europe demonstrates this to be false. Once factoring in work benefits, i.e. for single workers of £93.77 per week against zero for those working in Poland and Bulgaria. Whilst families with 2 children result in average in-work benefits payments of £330 per week, which is set against salary deductions of just £31 that results in a huge benefits net subsidy to the migrant workers of £300 per week. Therefore, the truth is that migrants across Eastern Europe and Southern Europe come to the UK for benefits. It's just that these are in-work benefits for which there is an economic cost in terms of the budget deficit and unemployed youth. The consequences of net immigration of near 4 million people can most visibly be seen and felt in the UK housing market, where house building has abysmally failed to keep pace with Britain's population explosion, a crisis that was further exacerbated following the financial crisis that induced a slump in house building, as the graph shows the UK annual population change against annual housing build completions. The graph illustrates 2 major long-term shifts that took place in the UK housing market dynamics since 1980. Firstly, Margaret Thatcher's 1980s Right to Buy Your Council House scheme appears to have acted as a huge disincentive for local councils to build properties, where council house building literally collapsed from around 100,000 per year in 1980 to just 20,000 per year by 1990, and by 1995 had fallen to less than 2,000 per year, where local house authority house building has languished ever since. Even under the 1997 to 2010 Labour government, as Right to Buy has acted as a huge disincentive for local authorities to build new properties that they may be forced to sell off all within a few short years. Secondly, by 2000, the annual increase in population as a consequence of Labour's immigration policy started to far exceed the number of new builds that ended the preceding overall trend for construction to exceed population growth in terms of addressing the UK's long-standing housing shortage, especially considering that the average size of households has continued to shrink, falling from 3.1 in 1960 to just 2.24 in 2014, one of the lowest in the world. As a consequence of the increase in single-person households and single-parent families. Whilst instead of doubling house building during the immigration crisis, the near exact opposite has taken place, as far fewer houses were built each year during the noughties. The ratio of average household size is still trending lower, which means that even if the UK population suddenly stopped increasing, then the falling household size ratio towards 2.15 by 2030 would still imply an extra demand for 1.25 million properties to be built just to stand still. This graph further illustrates the ratio between the cumulative change in population since 1970 against the cumulative number of new housing builds also since 1970 as an overcrowding ratio overlaid with UK house prices that illustrates the worsening trend in the level of overcrowding due to inability of new supply to meet new demand that just keeps accumulating each year. This also illustrates the change in trend during the Thatcher years for the reversal of the policy for the construction of social housing and the implementation of the Right to Buy scheme that today has resulted in the sale of over 2 million socially owned local council housing that fueled the property boom of the 90s and noughties. The trend that was set in motion was for the inability of supply to keep pace with population growth, which ensured continuously persistent upward pressure on house prices that, despite the Great Recession of 2008 to 2009, still showed an accelerating trend as new build supply that currently stands at an estimate of 140k per year is set against government-owned estimates for a requirement of at least 250,000 properties per year, with 300,000 a more realistic estimate. The bottom line is that the UK housing crisis is being primed to explode. Britain is literally being sleepwalked towards having to painfully deal with its extreme consequences due to the failure of successive governments to take preemptive action before the crisis explodes, which it probably will do sometime before the 2020 general election, forcing politicians to think the unthinkable in an attempt to bribe voters at that election, such as extending the right to buy scheme to private tenants. Britain's demographic crisis, as illustrated by an ever-growing aging population, that despite an increasing number of workers, mainly due to immigration, cannot maintain ratios of the past, where 20 years ago there were 8.9 million pensioners against 28 million workers, or a ratio of 3.15 workers to every retiree. Today there are over 11.8 million pensioners to 30.9 million workers, a ratio of 2.61 to 1, as illustrating Britain's growing elderly population that is demanding an ever greater share of the economic pie, that puts an ever increasing burden on the welfare state services such as the NHS that will continue to severely impact the economy. There is no end in sight to Britain's demographic crisis, as an aging population looks set to see the number of retirees increase from today's 11.8 million to 13.5 million by 2020, the impact of which is partially being offset by Britain's rising population from 62 million in 2010 to at least 67 million by 2020, which, whilst putting Britain in a far better state than many other countries whose total population and worker base is already shrinking, as well as experiencing an increasing aging population such as Japan. However, an 8% increase in the total population against a 17% increase in retirees is not going to offset the impact of the increasing number of retirees, as the ratio of workers to retirees continues to fall, especially as the trend looks set to continue into 2030 and maybe even beyond, by which time the number of over 75s looks set to literally double in number, rising from 8% of the population today to more than 13%, and in total approx 25% of Britain's population will be over 65, which suggests an unbearable ratio of 1.9 workers per retiree, which implies that a huge amount of purchasing power workers will be lost over the next 20 years. The consequences of Britain's demographics are, as I pointed out over 5 years ago in the Inflation Megatrend ebook of January 2010, that governments only really have one solution, which is to print money, be it called debt that will never be repaid, or QE, or a multitude of other examples such as the funding for lending scheme, and the consequences of perpetual exponential money printing, as I have written of on a near monthly basis, is for the continuous exponential inflation megatrend. This is why whenever I hear warnings of deflation, I consider the proponents to be delusional, because there will never be persistent deflation. In terms of the UK housing market, the increasing number of elderly clinging onto the family homes acts as a bottleneck on the availability of such high in demand properties unless retirees are encouraged to downsize. Additionally, the wage slaves with less real term disposable income to pay towards housing costs in terms of mortgages and rent, which on face value implies a persistent real terms deflationary outcome for UK house prices over the next 20 years. However, this is to contend with the out of control immigration coupled with domestic population growth, as immigrant couples tend to have larger families, which coupled with the benefits culture of baby making factories will result in at least 10 million extra people, a trend that is more than capable of overcoming the deflation as a consequence of an aging population that ultimately has to imply persistently high real rates of inflation, not just for house prices, but for sectors right across the economy. Where house prices are concerned, the key driver is the inflation consequences of printing debt, as virtually all political parties propose the same policies of deficit spending financed through printed money, be it called QE or government bonds. Even the austerity coalition has shown itself to be far from that in truth, for in nominal terms the coalition government has printed virtually the same amount of debt as the last Labour government did. Even debt as a percentage of GDP has risen under the so-called economic austerity coalition government to 75% of GDP, which is some 7% above where the Con-Lib coalition originally forecast it would be by now. Therefore, the inflation megatrend will continue its inexorable climb around which asset prices such as stocks and housing oscillate. So no matter what form the next government takes, all of the fundamentals will remain intact for rising house prices for the duration of the next parliament. So where the political parties are concerned, it boils down to degrees of money printing inflation, i.e. Labour and Lib Dems will print more than the Conservatives and the SNP would print a lot more, with the Greens' completely balmy policies destined to hyperinflate. Where I only see the UKIP given severe immigration policies would impact on the UK house prices bull market, though of course they say one thing whilst campaigning, would likely do another when in power. So yes, they too will print money to buy votes. For housing market election bribes, we only need to look at the March budget announcement of the Help to Buy ISA, that for every £200 saved will have £50 added to by the government, i.e. a 25% government house buying deposit subsidy that currently converts into a maximum of £3,000 per prospective home buyer. That's 12k total deposit, that I'm sure will be raised annually, and which for couples implies a £6,000 subsidy, which acts to boost demand. That this adds further fuel to the UK house prices bull market that illustrates just one mechanism for the government printing money to inject directly into the UK housing market via voter bribes. And most recently, the Conservative manifesto's centrepiece is to extend the near 35-year right to buy your council house scheme to over 1.3 million housing association tenants, so that they too may buy their homes at a deep discount of as much as 70% or £103,000 per property in London and 77k for the rest of the UK. The starting discount for housing association homes after 3 years of tenancy will be 35%, rising by 1% per year, and 50% for flats, rising by 2% per year. Though I don't see how this would exactly work, because the Conservatives are proposing to sell homes they do not own, so may face stiff resistance from the housing associations. It is now 15 months since I published my 5-year UK house prices trend forecast for an average 55% rise to the end of 2018. In terms of the current state of the UK housing bull market, the Halifax Average House Prices Index for February 2015 of £190,113 basically shows that the UK housing bull market paused from August to December last year before resuming its bull trend in January. House prices are currently showing a deviation of 4% against the forecast trend trajectory. In terms of long-term forecast for a 55% rise in average UK house prices by the end of 2018, if the current deviation continues to persist, then this would result in a 15% reduction in the forecast outcome to approximately 40% rise by the end of 2018. Looking beyond my existing 5-year forecast covering the period from 2014 to 2018, that after 7 years of relative economic pain from 2008 to 2014, as illustrated by the cost of living crisis, Britain is at the very beginnings of a 7-year economic boom that can only continue to drive UK prices bull market to well into the 2020s, for which I at least expect an average price rise of 10% per annum, so that converts into a minimum 70% rise from current prices over the next 7 years. This graph further illustrates the fall in momentum during the second half of 2014, and that this year's surge to back above 10% has already evaporated, as momentum has now slowed to plus 6.6%. So it appears the coalition government will have missed setting a new high in average house prices just prior to the election, probably due to ongoing weakness in house prices in the southeast. Therefore, I can expect a continuing slowdown in house prices during the summer months. In fact, the momentum trend is likely to be very similar to Labour's 2010 house prices mini-election boom that I had started to warn of to expect from mid-2009. Though at this point I am not expecting a similar post-election collapse to minus 5%, as that was as a consequence of Labour going for broke on a near 160 billion annual deficit debt printing binge that was completely unsustainable. Whilst the most recent polls are now marginally putting Labour ahead of the Conservatives, however, my long-standing analysis of seats versus house prices trend trajectory painted a picture for a likely probable Conservative outright general election victory. The updated election seats trend graph illustrates that the Conservatives are trending towards achieving a single-digit outright majority election win, which no one, and I mean no serious commentator or analyst, has either currently advocated or has in the past, so it will come as a big shock to pollsters on election day if the Conservatives win an outright majority. The opinion polls have swung in Labour's favour as voters were clearly put off by the personal attacks against the Labour leader. There remains a strong probability for a hung parliament, which makes the manifestos redundant, not just because politicians lie and make promises that they just cannot keep, with a long list of excuses ready as to why they could not fulfill their promises, but that post-election parties will negotiate their actual programme for government as part of coalition agreements. So today's Labour and Conservative manifestos are approximately 50% fantasy election bribes that will never become manifest. The opinion polls currently forecast seat averages for the Conservatives on 274.5 and Labour on 276.5. The calculations for what form a coalition government could take become extremely complicated, if not impossible, without resorting to the truly messy and disastrous outcome that involves the Scottish nationalists as the only viable outcome. May 2015 keeps flip-flopping between Labour and the Conservatives in the lead at no greater distance than 10 seats from 275. Electoral calculus have consistently exhibited a strong bias towards Labour, which has been slowly eroding over time, that suggests will converge with other forecasters over the next few weeks. Election forecast tends to consistently put the Conservatives in a clear seats lead, so tends to most closely reflect my own long-standing forecast. And lastly, The Guardian, after maintaining a continuous marginal advantage to the Conservatives over Labour, has now swung in Labour's favour, though exhibiting no clear trend direction. Overall, the opinion posters are currently trending in favour of the Labour Party, which if the trend continues implies that Labour will be the largest party on election day on about 290 seats. That is contrary to my forecast expectations for the Tories to lead with at least 296 seats. Another point of difference is that pollsters continue to grossly overestimate the number of seats the SNP will win, i.e. typically 48 to 54 against my expectations of just 35. So in my judgment, the opinion polls remain wrong, as they continue to persistently underestimate the number of seats the Conservatives will actually win by a widening margin, who in my opinion could still even win an outright majority on May the 7th. In terms of what I actually see as the most probable outcome for the general election, I refer to my in-depth analysis and concluding forecast of 28th of February. The remaining balance of 558 seats, split according to the consensus view such as May2015.com, would result in Labour leading on 281 seats against Conservatives on about 277. However, this analysis suggests that the opinion polls are grossly underestimating the number of seats the Conservatives will actually win on May 7th, where there is even a chance for the Conservatives to win an outright majority, though probability favours another hung parliament. However, given the UKIP surge, it will be tough for the Conservatives to retain their current tally of 302 MPs, as I expect at least 3 will be lost to UKIP and many more lost to Labour, against which at least a handful will likely be gained from the Lib Dems, which therefore suggests that the Tories will achieve a seat total in the 290s. My forecast conclusion is for the Conservatives to win 296 seats at the May 7th general election and Labour second on 262 seats, and the full seats per political party breakdown as shown. Therefore, the most probable outcome is for a continuation of the condemned coalition government on 326 seats, i.e. Conservative 296 plus Lib Dem 30, where any shortfall would likely find support from the DUP's 8 seats. The alternative is for a truly messy Labour, Liberal, SNP supported chaotic government on about 327 seats, which in my opinion would be a truly disastrous outcome for Britain, nearly as bad as if Scotland had voted for independence last September. Another possibility is that should the Conservatives do better than forecast, i.e. secure over 300 seats, but still fail to win an overall majority, then they may choose to go it alone with the plan to work towards winning a May 2016 general election. The bottom line is that the opinion polls do not reflect how people will actually vote on May 7th, when they are faced with the stark choice of a steady as she goes condemned government or take a huge gamble on Ed Miliband's Labour Party. So in my opinion, several millions of voters will choose to play it safe with the condemned government, which thus is the most probable outcome. The bottom line is that no matter which party forms the next government, it will only make a marginal difference to Britain's housing crisis, for the fundamental megatrend drivers of population growth and lack of new house building. Therefore, in terms of house prices, the difference between a Labour and Conservative-led government will be approximately just 1 to 2% per year. Of course, this trend is unsustainable as it becomes increasingly impossible for even well-paid workers to climb onto the housing ladder, and even worse for the low-paid, where for instance if the Conservatives win, we'll see even less social housing as the existing tenants will refuse to budge as they see their housing association rental properties in terms of the £77,000 to £103,000 potential pot of gold that they will hope to someday somehow capitalise upon, which if they do so ultimately means approximately 40% of which will be sold onto the private rental sector. Thus, Britain's housing crisis is storing up a huge potential for a great deal of social unrest because as much as 1/5 of the UK population may be locked out of the UK housing market in the private rental sector, which implies that under political pressure from such a large number of potential voters that in the lead up to the 2020 general election, political parties may announce what is unthinkable today, that is for a catastrophe for the buy-to-let sector investors, as the right to buy scheme is extended once more to the private rental sector. That would result in a panic exodus, at least at the bottom end of the UK housing market.